I'm super excited to be joined by Petter. And Petter, thank you so much for joining the show.
Thanks a lot. Thanks for inviting me.
I want to go all the way back and sort of understand when you got interested in finance. Was it through family? Was it through someone close in your proximity? What was sort of the story that led you into the finance rabbit hole?
It sure was family. So it started really early. I think I was about 12, 13, something like that. And my grandfather started to talk about a company, Gunnebo, that he heard about because he was really into like carpenting and stuff like that. So it was something about fences or nails, or I don't even remember, but something got him interested in that company, and he got me interested. So I bought shares for 200 or 300 kroners in Gunnebo, and in 1 year or so they were like up 100% or something. So that was like really my first nugget of feeling the power of the stock exchange.
Was it sort of like the how do you say, like the money piece, the interesting part at that your young age, or was it really to understand the company and sort of understand like the economy overall?
In that young age, I don't think I understood anything about the company. So it was more the fact that I in some sense understood that there's a market where your investment or your money can grow without you putting in more work than just having an idea, basically. So I think that was just really sparking my interest, but that career was like super short. So probably I found some nice toy or something to buy, and then I didn't think about stocks for some years. So it was back when in my second to last year in gymnasium where I revisited the stock market again when I was about 18, 19 years old or so.
If you haven't been involved in finance, what would you replace that hobby with? I think you know the answer, but
yeah, it probably is. My two biggest hobbies is the two things that I actually work with, that I put a lot of time into, and that is the stock market and sports fishing. So those two things take a lot of time. But now I'm also a father, so I have to try fit them in with the most important thing of all, and that of course is family. Yeah.
Maybe a cliche question, but I'll ask it anyway. Is there any similarities between sport fishing and finance? Obviously, you can say that you need to be concentrated, you need to be competitive, etc. But is there some parallel we can get out of it?
Yeah, surely. I think the biggest thing for me is that I realize that I'm becoming better and better at both things, but I'm not even close to the top. And I know that I will never grasp everything. I will never be fully capable of doing what you can do. So I think that's what's really, really intriguing to me, that it's new information every day. The stock market sends out new releases from new companies, new angles of information. You get better, you see new things, new underlying trends, and sports fishing, it's more of a static world in one sense, but you're like competing against living creatures that's down there, and one day I believe that I understand their behavior and their pattern, and one day I'm totally lost. So both things are so hard, and I think that's what's intriguing me the most.
Can you tell us a bit about the company Soder Sportsfiske, just the journey they've been through? Because obviously it's not a new company, but maybe it's like the evolution has made it that it's a really new company today with great growth potential.
Yeah, it's a new company in the sense that it's a listed company that you can evaluate from like really serious perspective, and for me it started from a customer perspective. So I've been sports fishing since I was 5-6 years old, and I've done it a lot. And in I think 2014 or so, I started to really concentrate my buying behavior towards Soder Sportsfiske, the local store here in Stockholm, but also their e-commerce. And I really felt that it stood out to everything else, and that I got both the customer experience that I wanted, but also the knowledge and the broad range of products and all that. So for me, as someone that's obsessed with analyzing companies, I went into the company registry, and I looked the company up, and I saw that this was a really well run company, profitable from day one. E-commerce was not openly cash flow positive and profitable at that time. So I really contacted the two founders and started to try to get them to understand that I could help them.
I mean, this is a unique category, and I just want to spend some minutes explaining it, because you've talked about it before. Because if you look at this company, like normally a smart guy would say that, okay, why can't Amazon just compete this business model? But there are some features that make this quite unique. So can you just quickly explain that for people who are interested in that type of niche?
Absolutely. So some things that you can start with is that the range of products is really broad. So you have to have 20, 30, 40,000 products to compete. And of course, Amazon can do that. They have warehouses much bigger than that. But you have to know what those 40,000 products should be. And it's really news driven. And sometimes you also need to create the news flow yourself. You have to go out there and fish with new products and show the market that you can catch fish on it. So it's a super niche, super nerdy, super knowledge thirsting industry that doesn't really fit for a super broad multi-brand, multi-category e-tailer. You want to buy the stuff from someone that catches fish. It's hard to explain better than that, but that's actually the case.
Great explanation. You said that in this story that you approached the entrepreneurs and the founders and talked to them. And that story, I think, is relevant to also explaining Petter as the investor, because it seems like you started with that approach from a very young age. Can you sort of explain us that time of your life and how you always have approached companies, get to know the founders if you can, etc.?
Yeah, so there are a lot of different ways in being successful on the stock market, but for me, knowledge and conviction are really like a word that's being used a lot, but it's still so relevant, so I have to use it. Is super important. So I know that I won't find the best investments at any specific time, but my goal is rather to find the best investments for me. And the best investments for me are companies that can deliver growth, profitable growth, and growth that I understand and believe in. So I started really early to contact the CEOs, the CFOs, the boards of these companies. You have to, of course, stay super humble and understand that they actually don't have time for a really small investor like me, as I was in the beginning. But you have to try to find angles so they give you the answers that you want, and that can be to be really into what they're doing and showing them that you put in a lot of time to understand the business model and so on. Because really often even fund managers that are on the top 10 list, they don't know the company as good as you, and if you show the management that you really care, they will give you some airtime.
Quartr is the new way of doing company research. Their first mission is to enable access to conference calls, investor presentations, transcripts, and earnings reports. Their second mission is to create a completely new way for companies to reach their investors and vice versa. Quartr is 100% free. They include companies from 15 markets today and plan to add more. They prioritize requested companies, and users can now leave reactions while listening to the conference calls. So make sure to follow them on Twitter at Quartr app. I mean, leading up to this conversation, I got some Twitter DMs explaining your track record, and the number was so big that I'm afraid to say it even. But can you sort of explain your track record and what you can share publicly, because it's been quite a journey at least.
So I've been active on the stock market for 15 or 16 years, and I'm super proud of what I've been able to achieve, and I think the way to do that is that I did a lot of mistakes the first years, so there I was probably just lucky. I started in a really good period 2005-2006, when it's never easy, but it was easier then. So I did a lot of really bad calls, and I got awarded for them anyways. So I was lucky in terms of timing, but I did a lot of mistakes, and I think that I learned from some of them. And then I think I pretty early on found my strategy, and I was able to stick to it. So I started off by being more active, more of a trader. I could have just a position over 1 day or 2 days, but really early on I started to understand, for me, swing trading is the thing. So for between year 3 and 10 or so, I had like 2 or 3 core positions that I held for maybe 12 to 24 months, and then I have swing positions for 3 to 6 months or 1 to 3 months sometimes. And that's evolved to the strategy I have today, where I only have core holdings that I hold for 12 to 36 months. So I think, I've spent a lot of time reading press releases, company reports, and I stuck to my strategy. So I think that would be the best explanation on how I succeeded fairly well the last couple of years.
I mean, it's the famous, I think it's Mark Cuban quote, that concentration builds wealth and diversification protects it. And of course, it's all about finding your own investment style. But just to repeat for the people that really wants to understand your strategy, it's basically finding, I don't know if you would say like 5 companies today, and really go hard on them and expect them to have the growth trajectory that you predict.
Yeah. So starting off, I had like maybe more active approach, maybe 6, 7, 8, 9, 10 companies in the portfolio at any specific time, but those were changed out a lot. So it's more of a trading strategy the first 2-3 years. After that, I went on to a more like swing trading strategy, and that's when I boiled it down to, for me to really know my case, because it's both knowing the company and knowing the case, your investment case. Those can be 2 separate things. I can see a wonderful company, but I won't invest in it because I don't see an investment case. And it can also be the other way around, that I see a really good investment case, but it's an okay company. So I chose, or I still choose, a really focused strategy. I have between 5 and 8 holdings today, I would say. And the reasoning behind that is that way I can put a lot of time into every holding. So I visit the companies in their headquarters every year. I speak to the management as much as I can, and I read everything I get my hands on. So for me, that has been the strategy. And I can also take it as far to say that if you are willing to put in the time, if you think this is really, really fun thing to do, to be on the stock market and to put in the time, I believe that a focused strategy is the best risk reward strategy to really high returns. And you have to go into that risk reward equation and be okay with taking that kind of risk, because of course you will hit black swans and you will have bad calls, but that's part of the game. That's not the argument against the strategy. That's a part of it, I would say.
I asked a friend to describe you, and he said that there were 3 words to sum you up. It was consistency, quality, and focus. Do you think that's a fair description on your approach in
That was
investing?
really nice of him to say. Yeah, but I think it's a good way of describing it. So normally I only invest in profitable companies. For some that limits the alternatives too much. I do still some investments where they're really on the tipping point and so on, but to keep it easy, only profitable companies. And consistency, yes, I think that's been maybe one of my really strong suits, that I don't anymore get sucked into the hype or the FOMO when a holding that I don't understand really runs. For example, I don't speak about specific companies, but for example, iGaming, I've never understood it. It's too hard for me. I think it's too much regulatory affairs that I will never really understand. So I've never rode that underlying trend, and that's okay. You don't have to do them all. You just have to do the things that you understand and do them good.
Is that example also relevant in the crypto space? Have you dabbled into that or just completely stayed away?
Completely stayed away. I don't understand anything. I do understand that that's the underlying technology, the blockchain technology, but rather than the actual currencies. But for me, no, that's I'm not intelligent enough to understand it, so I just keep away.
Let's talk a bit about identifying companies. You have the sort of the screening strategy, and you have the gut feeling. You really rely on the gut feeling. And I think it's important to maybe be specific about what gut feeling is, because gut feeling isn't necessarily waking up in the morning, having an idea in the shower, but it's based on millions of experiences and data points. How would you sort of describe that feeling?
Yeah, to start off, I'm really cheating in one way, because I'm working with this. We have banks, institutions, fund companies, and a lot of listed companies as customers. So I, at every single point in time, have one of my screens that's a terminal with just news flow, share prices, and so on. So one eye is always there. I don't read everything, but I read a lot, and I see a lot, and I hear a lot. I speak to a lot of people. So sometimes a name just pops up, and I don't always know where it comes from, but it's like a condensed piece of information where I've seen a company name, heard a good investor talking about a specific underlying trend. At the same time, that company took a 5G order, and this happened, and this happened, and it just adds up to, okay, now I have to put in the time into this company. And of course, I misses a lot of stuff by just relying on those ideas coming to me, but it's enough. I just have to swing on those 5 to 10 balls, and I have a new company in my portfolio maybe every year. So that's fine. I don't have to find them all. And screening can be good. I have found investments that way. It's not that I rule it out. It's just that sometimes it's a little bit false security in those type of, if you only go about it that way, I think you will miss a lot, because investing is much more complex than that.
It makes sense. I think another, I will say, like cheating point is that being an entrepreneur yourself, you also have a very unique insight into really understanding the business models of the companies. How can we break that down?
Yeah, that's totally it. So the main weakness, if I can say, that I see in other investors is that they've learned the talk and learned how to speak about investments, and they sound super smart. But when you try to really talk about how the pricing will change when they can't do this or can't do that, or why recurring revenue is so much better than selling this product through a really super solid scalable distribution network, then you sometimes see that they're more like traders than investors. They've learned how to talk about the story, and that's fine. But then you should adapt your knowledge base or your ambition with your strategy, and don't think that you are a long-term investor, because then the first bad period you will just throw the holding out and say nothing to no one because you're ashamed. So yes, that's been a really good piece in the toolbox to understand companies. And when we ran our first company, Introduce, I held investor presentations. So I did 1 to 3 investor presentation every day for 4 years. And sometimes I sat and listened to a Polish subcontractor that did something super boring, but I gathered like pieces of information that I really used in other cases. So learning about different industries, different business models, different distribution chains, different ways of pricing things. You can never hear enough of that, because you will use those pieces in the puzzle when you visit your next case.
I mean, so collecting those ideas is a perfect segue to the diary I understand you wrote during the COVID pandemic. Can you tell us a bit about that experiment? And you don't have to read off from your diary, but maybe you can have some key insights.
No, but the last 3-4 years, I've been really unaffected by index moves, the dips in the market, weaker periods for my own holdings. So I thought that, okay, now I'm immune to this. I can just focus on fundamentals. I can do this now. And then we started 2020, and we got back to those days that I experienced in 2008, because I was active then as well. Then I was super. I had a small portfolio that I could move pretty quickly. So then I was quick out. So I was only down 13% or so 2008, just because I sold everything really early and stayed out. So that was good. I cannot do that now, and that's not in line with my strategy now. So I saw a really big decline in my portfolio, and I was affected. I was not Superman. So what I did there was that I didn't do anything stupid in terms of trying to sell a lot of holdings or do a lot of stuff. I think I bought into one new case that's been really good, and I divested one case that was okay. So that's what I did. But I did keep a diary just to try to understand the psychology of those days, and it was stuff like, okay, will this be Armageddon someday? To, okay, now I feel a little bit more optimistic. Will this stay? And then the next day, no, I'm not optimistic anymore. So yeah, I surely got affected a lot. Luckily, I didn't act on it, but for my head, it was tough.
Did that experience make you want to track your thoughts even more in the coming years, or was it just an experiment that you learned something from and now
it was more of an experiment, because I was a little bit cocky and I thought that I was past those days, and there I am also lucky that I have my co-founder Måns. He is Superman in that sense. It's crazy when things is blowing. I just asking him, okay, am I overreacting here? And he can be down 13% in his portfolio one day, and he will still look at it with a really sensible eyes. So yeah, he's a big rock those days, and maybe I can help him with some new angles and cases and stuff where I go maybe a little bit deeper than him. Yeah.
Sounds like the perfect partnership. Just the last principle on your investment journey. If you talk about a concept like simplicity, I bring that up because when you work with data all the time, you can have information about everything, but it seems like to really understand your investment strategy and how you structure things, you kind of try to make it as simple as possible and try to focus on the features that is maybe the Pareto principle is a good one, that the 20% that gives 80% of the result, at least have that framework in mind. How important has it been to have like a simple but solid foundation to work from when you're investing?
I don't think I have a really applicable model that I can use on every investment. The only thing that I come back to is that when I've decided to enter or go into a new position, I'm starting to acquire shares, and it's going to be a significant holding. So for me, everything from 35% down to 10% of the portfolio makes sense for me. So then I always do one sheet. I'm not a pro in Excel, so I do it like in Google Sheets, and I just do 2-3 years back, 2-3 years into the future, and I do simple, a really simple model. That's a little bit different depending on the type of company, but normally it's like top line growth, profitability. I do always like gross margin, of course, and OPEX in terms of sales, so you can see the effectiveness of the company. And I always decide on my view of the peak margin. I think that's one of the best advice I can get that's really easy to try to understand. Okay, what's the peak margin of this company? And the peak margin would be the profitability level that this company will have when they're in blue sky steady state, so to say. And those type of really qualitative high growth companies, you need to value from a peak margin perspective at every point in time. So I don't really care if they're doing 12% or 17% next year. I just care what they're doing from my peak margin perspective, because that's how I value them. I see them as being able to have that peak margin at the end of my case period, the end of my holding period, and hopefully the market will even over evaluate that margin at that point in time. So that's what I always do. And then gathering information and finding like the bricks of information that I need, that varies between company to company. It depends what I think is hard and what I can't understand. That's where I dig deeper.
Very, very good advice. Let's go over to the entrepreneurial part of your life. I mean, obviously you talked about it a bit, but maybe just to repeat a bit, the first experience in entrepreneurship, because I guess that was like super critical in terms of you wanting to continue to create companies. So maybe just like go back and just briefly talk about that experience and also how you wanted to scale it.
Yeah. So, the basis in the entrepreneurial experience was actually, so it's good that we started with the investment approach, because that's where it came from. So I got really into investing in the last years of my education. So I really decided not to study economics after that, because my father done it, my big brother done it. I wanted to do something unique. But then I felt, okay, so this investing thing is going to be a big part of my life. So I need to understand the basic accounting and also like management models and pricing models and stuff like that. So I started to study at Handelshögskolan here in Stockholm. But there I decided I didn't want to, I wanted to pass the exams, but not much more than that, and then put in my time by working. So I did some extra work for Börsveckan with Peter Benson in the beginning, and then pretty early on, me and Måns started a company called Introduce that is today owned by ABG, Sundal Collier. And that was a platform for introducing micro and nano cap companies to both institutional investors and private investors. So we did that in the middle of the financial crisis in 2008. So that was really a good way of starting to understand how to start a business, because it was not about A rounds and B rounds and big investors, but we had like 30,000 kroners to build the product, and we went from there. So that's where we started, and everything came from the interest of financial data and financial analysis, I would say.
Just a couple of points there. So one is the timing aspect. Since you were young and let's say a low risk profile, maybe that was a very good place to start in sort of like to have that experience early on compared to a couple of years in more is the best, right?
Yeah.
And the second part of that question was that I think there's a very good case to be made that it's if you're going to go the entrepreneurial way, to build a product that you would like as a customer seems like a very good strategy. I don't know if you agree on that point, but it seems like a very good starting point.
Yeah, it's fun to do it that way. To start a company has to be fun, because otherwise you will quit. So if it's the best way of doing it, I don't know. You have like brilliant entrepreneurs that create anything that from anything. But for me, I think it was crucial to do something where I really wanted to create a product, where I really wanted to change something, not something that I wanted to use myself. Because we have always like done everything ourselves. I'm not educated in UX or UI or creating a product, but I still want to create the product myself. I don't want to hire 15 people having ideas how this should look. Me and Måns, we knew how we wanted the platform to look. So we took a pen and we took a paper and we started drawing, basically. So yeah, for me, I love thinking about business in that naive way, is just to solve something that you wanted to be solved yourself. And I think I've talked about it quite a bit, and I think that the focus in startups today is too visionary. Everyone thinks that they have to be the next Elon Musk or the next Mark Zuckerberg or the next Daniel Ek, and that's fantastic. That's what will change the world and change big things, but all people can't be that. And it's wonderful to create a fantastic small business as well. And I think that more people should feel free to start a business without those super global fancy ambitions.
Totally agree. If we look at the products you have been building today, and you can introduce them the way you want, but I thought a good place to start was maybe to talk about the ultimate customer experience that you want to create through your products, right? Because you're trying to create products that makes the investment decisions or the way you screen the market you want to take it to a new level. So how do you define that ultimate customer experience?
The ultimate customer experience is easy. It's just we have to create products that the customers love and don't like. And that's so hard when it's a RegTech product where you should follow the new market abuse regulation, and it should be encrypted, and it should be it's not a funny thing, and you have to create something that they love anyway. So then you are always really focused on two things that always has to be there, and that's user friendliness. And user friendliness or usability always comes from simplicity. Never ever underestimate something being one click instead of 2 clicks, or finding it in a stressful situation or stuff like that. And the second component is customer service that almost every B2B company underestimates. So for us, the product, it's not just the platform or the code or the data. That's, of course, super, super important, and those aspects has to be there. But without usability and customer support, your product is nothing. So I think those are the two things that we really, really focus on as a company.
It really makes sense. Let's talk a bit about the specific products and maybe how you have decided to map them out to fit your overall structure and company.
Yeah, so we're a fairly small company to have 6 products. We're closing in on 100 million SEK in ARR, so we're not super small, but we're small. So I think to really understand what we've done here is to see it rather as a product suite than anything else, because a lot of these products evolve from the same platform and the same data. So we started off with one product. It's holdings. It's still the product that we're most known for. It's not the biggest product anymore, but it's the product we're the most known for. It's a digital database and an analytics tool for ownership data in the Nordics. So if you're a stockbroker, or if you're a fund manager, or if you're a journalist for a newspaper, you need to know, and you want to know, who's owning what, and who's buying what, and who's selling what, and so on. And that data is really, really, really hard to show in a good way. So that's what we put a lot of time into. So that's the one product in the business area that we call banks and institutions. The other product there is called Data Flow, and it's just an API version of holdings. So there we're a little bit of a one product company towards banks and institutions. On the other side, we have our investor relations portfolio of 4 different products. We have Monitor, that's also based on this ownership database, but where you put investor targeting functionality, investor relationship management, rather a CRM for your investors. So if a big large cap company in Finland or Norway or Sweden uses our product, they're actually logging the meetings they have with investors. So if they had a meeting with the capital group, they will log that, and they will get a push notification or a reminder that now they bought in some shares, maybe you should book a new meeting and stuff like that. So same database, new packaging, and some unique functionality on top of it.
If we talk about holdings and sort of the ownership data, like many people would say, like it seems like a problem that should be, I wouldn't say easy to solve, but definitely doable. But I know that's not the case at all. What's the easy explanation behind that, just so people truly understand why this is a very hard problem to tackle?
The easy explanation is that the clearing system in the Nordics is account data and not ownership data. So what people has been trusting as ownership data is rather the accounts where the shares are stored. And to get the right picture of an ownership list or ownership changes or a portfolio, you need to diversify your sources, and you need to use overlapping sources. So to create a large cap ownership list, we need sometimes up to 30 different sources, and 30 different sources with overlapping data. So we need to know, we need to hide these shares, show these shares, this connection needs to be like this, because this owner has 4 accounts that's where the account data is the same as ownership data, and some that's not, and it's really, really, really complex if you care about the third decimal point. If you just want an okay picture, is fairly easy, but we sell towards the people that really cares about the details, and then you have to put in the time. So we have spent 8 years now creating pretty robust and complex database structures, and we also acquired a company that's done this since 1985. So we have a lot of historical data and a lot of links in the data, and we have 6 plus 12, I would say. So 6 people working with it full time, and 12 people working with it maybe 50% of the time to do manual review. Because this is something you need to do. It's impossible if you try to automate. It's just look at the big platforms. They all have ownership data, but you can't automate it.
I mean, there is a saying from the seafood industry or the seafood exporters to Asia that some countries, they try to explain the models and how it works, and they just like point to a black box. Like something is going on, but we're not sure what's going on. how big is that black box in this field of investing? Because I guess, of course, you have to showcase the data, but there can be so many ways to, I wouldn't say trick people, but to make it so sophisticated that it actually is a black box in some way.
But it's not a black box in the way that if you have the time, I can explain it to you, but it will take a couple of hours, and I will need to show maybe 50 different examples. So in that way, it's not a black box, but it's time consuming and it's super hard. So I would rather say that our goal from day one has to be to get the trust of the industry. And that's why we're not selling analyzed products where we say that it's this way or that way. We have to stay an objective middle in this ecosystem where we have the banks, we have the buy side, we have the financial media, we have the regulatory agencies, we have the listed companies themselves, and they're all customer to Modular Finance. But we can always just be focused on delivering tools and data and nothing more. So the advice that has to come from consultancy firms, and the price target that has to come from the banks, and the investment decision that has to come from the institutions. So we have to be a little bit focused and not carried away to do everything. We would probably be able to double our revenue really quickly if we did it all, but I think we would undermine our long-term position by doing that.
That's a very good perspective. And once again, you're bringing up the focus aspect. If you look at scaling your products now, are you that satisfied with your product offering right now? Because I guess, of course, you're a product person and a product CEO. So is it about scaling the company now, or is it still something in the product that you're really trying to get right?
I would say it's in the scaling phase. So the three products on top of Monitor in the listed company business area is data blocks where we do modules for the IR websites. We're trying to do a renaissance in IR websites where they're not just placeholder data that you don't care about. It looks good, but it's shit. But rather data that you as an investor really want to find at the company's own webpage. We have MFN, it's a distribution tool for press releases, and we have StrictLog, that's the RegTech tool. So I would say in terms of product, we're fairly happy. We're always doing reworks, and we always have some part of legacy that we need to take care of, and we're always adding new features every day. But for the moment, we're putting a lot of time into your fantastic country. So we really want to have a market leading position also in Norway. And we are going into Finland with fairly high pace. We're also on Iceland, and we're scratching the surface in Denmark. So I would say that the geographical expansion is really on top of focus, and we are also adding a lot of add-ons. So rather than new products, we're wanting to increase the sales to our existing customers. So we did launch a database for unlisted ownership data in Sweden just now, and we will add some big things in the beginning, or I say beginning of next year, but maybe it becomes summer.
I mean, since you are very pleasant, or you're talking nicely about Norway, one thing about Sweden is that you have some great entrepreneurs there that has done tremendously well. I mean, you mentioned Daniel, of course, the Spotify story. I just bring that up because I want to truly understand your thinking of Nordics versus Europe versus US and UK. But I think maybe it makes perfect sense because stocks, you need to truly understand them and be close to the regulators, etc. But maybe you can also explain like the growth trajectory.
Yeah, but I think the main reason that we have a really nice climate here in the Nordics is something as easy as that we trust each other. We do business in a way that if we say that we're going to do something, normally we will do it. So what I've heard, I've never done business in the Mediterranean area or in other geographical regions. But for us, even Finland and Norway was a little bit new culture and things we had to learn. But the basics are the same. So I think that makes it a really, really nice climate, and we have a lot of role models to look up to, and a really good climate to start new companies. But for us, of course, we will see. First, we will have to show that we can take a market leading position or even a market dominating position, because we are a true niche company, and I'm not happy just being a market leader. We want to be a humble market dominant. So we want market shares above 60%. That's where we strive, and then we have to do that without becoming a de facto monopolist, where you just get lazy and you raise prices just because you can, and so on. We have never raised prices on our holdings product, for example. It's been the same for a lot of companies. It's been, or customers that's been with us for 8 years. We're rather adding add-ons and having our ongoing contracts with a 3-month notice, so they can leave us whenever they want. So we're handling the market as we have fierce competition, but we're trying to create a position where we're really, really dominant in a small niche, so it doesn't make sense trying to compete with us.
Super interesting. Of course, we've discussed product a lot and strategy. I just wanted to also quickly go into hiring, culture. Do you spend a lot of time on that? Because obviously you can be super incredible as a coder, as a product designer, but also in the end, if you're going to grow, you need to lead the right way. You need to hire the right people. So how's that part of the journey been as well?
It's you can't over exaggerate the importance of those things, and I'm spending more and more time with them. So when I read the management courses at Handelshögskolan, I felt, or a lot of people felt, that like, what is this? This is like, give us the numbers. And now I understand was the most important things to learn. So yeah, I spend a lot of time trying to understand how you build culture when you're growing. It's really, really easy when you're 5 people, because just you are who you are and you lead by example. And I still try to do that. We're just 30 employees now, so we're still small. And that's why I try to keep it as small as possible, because it's easier to run. It's easier to get the culture or the way we do business out there. But yeah, that's the thing that I spend the most time on, much more than product, I would say now. So getting the right people in and giving them the right incentives and giving them the right path in our company to grow themselves, and thereby creating value for us in the meantime, so to say.
There's like I think it's a famous quote, very American, of course, but it's hire slow, fire fast. I mean, that fire fast thing isn't that easy in the Nordics. People have to remember that. But maybe I think sort of that you always need to sort of, maybe in your head, you need to have hiring high in your priority, because maybe you need a person in 6 months. And getting the right candidate can be super hard, because good candidates have options. So maybe just talk a bit about that as well.
Yeah, this year has been a perfect example of that, where we had a good team going into the year, and then we had the IPO market exploding. So it's been a fantastic year for us in terms of sales, but we were too slow when it comes to getting new people in. Now we've been lucky the last couple of weeks here, so we will manage, but we have had a couple of people here that's been working fairly hard the last couple of months here. So yeah, you have to be more and more proactive in your approach, and that's something that I'm really learning. So to hire slow is something that I've been good at, sometimes too good. one thing that I actually regret, and I see that we would have been able to grow a little bit faster if we would have been a little bit more proactive. But it's like an investment. It's easy to see in the rear view mirror, but that's something I'm learning from. And when we have the possibility, when the car is working, we really try to fuel it up. So we're not adding people when the structures aren't there, but when they are there, we try to fuel the car up a little bit faster. In terms of firing fast, that's not my strong suit. I try sometimes, maybe in a too large extent, see the best in every individual, and I try to, if I see it as if I brought someone in, it's a little bit on me. I should know who they are, what they can give us. So if that is still there, if they haven't done anything wrong or anything completely out of context, I really, really want to try to help them achieving here. Sometimes that's the right way to do, and it builds culture, and sometimes maybe I should have done differently.
I agree. Just a couple of more questions. Obviously, COVID has also accelerated working from home, etc. Obviously, you hire very smart people. So how do you view that concept of freedom and responsibility, and has that changed your mind during the last years?
I would say no. I'm still a firm believer in working as a group in a physical place. I feel like 80 years old when I say it, because it's not in line with most people's view on it, but I really stand for what I say. I believe that you should use the fact that you're a small company. Big companies have to have meetings all the time. We can go over to the other person's screen and do things like in the room. For me, that's when magic happens. That's when the best ideas just pop out of anything, and stuff like that. So I'm not a fan of the full remote model. I understand that it works for some companies, and if you founded the company that way, it probably could work. And for big companies, it works better. But for us, I would never go all the way there. With that said, I have to understand and respect the new reality, so to say, and we have to compete with companies that offer full remote. So we do a model where you have 2 remote days per week, voluntarily. We have a lot of people that don't use those at all, and we have some that it's a time in their life when it really works that way. But I do not do exceptions on that if you're not sick or something like that. But because we want our people and our company to be office first, not because I should stand there and see if are you working, but rather to give the person Modular Finance the possibility to strive. And I think that's almost only possible if we do it together and if we talk, and we have not figured out the way to do that remote.
I mean, there's trade-offs to everything, so I think you're explaining your thinking very, very well. Maybe this question is a bit philosophical, but it is in terms of, obviously you achieved a lot in a very young age. So just in your view of life, do you feel like you have destiny control in everything you do? So the destiny control aspect would be like, you can use an analogy like calculus. If you do A, B, C, you should expect this result. Or you can have the view that is more statistical. So you have like a normal distribution and you will fall in a random part. Of course, you can act on it and improve it, but it more about life is a bit more random. Do you have a view on that at all, or?
I have to believe that we can push things in the right direction, but my investment career has showed me that of course I cannot expect a straight line just because I work for it, so to say. So no, I would not say that I have destiny control. And one of the big things that's hard is to the days when you think, okay, if I would not do this, what would I do then? That's the really hard part. I think I still love this, and that's why I do it every day. It's still the happy customer and the evolving employee. Those are the two things that drive me. And of course, I'm also a competitive person, and I want our ARR to grow, but not because it's money. Rather, I see it as points, and that we as a team do things better together. But no, I would not say that I have a view that I can just if I just do this happens. We have to be super humble and happy every day, that where the cards are dealt in a way that's favorable for us, and otherwise we just have to adapt.
It's a perfect ending. Petter, it's been so much fun having you on. Just a final question: where can people get in touch and try your products and get in contact?
Yeah, so Modular Finance is a business-to-business company. So there we tell all institutions, banks, listed companies to contact us at sales@modularfinance.se to know more about our products. Something that we haven't talked about today, but that's fun as well, is that we do have a business-to-consumer initiative that's called börsdata.se. That's a consumer product for a screening tool. So now you understand that I am objective. I've talked about me not using screening that much, but that's a fantastic product to have as a part of your investment approach. So you can also look into that. And if you want to ask me something, I always try to answer every email that I get. So the email is up on our webpage, modularfinance.se, and I try to be as active as I can on Twitter. I would love to discuss specific companies more than I do, but I've decided not to, with respect to my market position. But even though I realize as much of my tweets are cheesy as hell, I try to sometimes give some advice and some ideas and some things that I've learned along the way.
That's perfect. Thank you so much for joining. It was a pleasure having you on.
Thanks a lot for inviting me.
Hi everyone, Christopher here again. Just a few things before you leave the show. If you liked this episode, it would be great if you could give it a review and also share it with your professional network. If you want to get in touch with me, Twitter is the place. Just go to @ChrisVonheim. You can also find this information in the show notes. Hope to see you tune in to the next episode, and take care.